I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another grain market update as we head into the weekend and kind of start to look forward to what to expect in next week's trade. And I think one of the best ways to get a game plan for next week is to reflect on what we saw this week. And this week, really the theme across the board, corn, soybeans, and wheat, was volatility, especially early on in the week where we saw that big sell-off on Monday, but we saw that funds were ready, willing, and able to be buyers on that dip, propelling us up to levels we haven't seen for some time. So we've got the December corn chart pulled up right here. And this was the pullback on Monday. This was a big level for us. This was support all the way back to November and February, and the eventual breakdown point became resistance along with this key Fibonacci retracement level. That held, and buyers and funds felt pretty comfortable adding to their net long position, and we saw the most recent Commitment of Traders report has them long about 157,000 contracts, which is a rather large position at any given time, let alone here in the middle of October. So nonetheless, funds added to their position, taking us to levels we haven't seen really since all the way back here in last September and October. This is a big pocket. This was resistance from September and October and December and January. This is about 405 to 411. If the bulls cannot get out above this pocket, we might start to see the market stagnate and potentially retreat a little bit. I think $4 is going to be psychologically significant here in next week's trades. The bulls must defend that pocket. Does that mean if we break down below $4 that the top is in? Well, potentially, but not necessarily. If we break down below $4, I think that could spark some additional long liquidation from the funds and take us back towards this 385, 388 level, which is this Fibonacci retracement and this old support pocket as well. Now, that's going to be the inflection point. The trend is your friend, and the path of least resistance has been higher. So although I do think there's an opportunity to sell side, I'm not saying load the boat and the top is in just yet. Now, moving over to the soybean market, a little bit different story. In corn, we could go back to last year on previous interactions between buyers and sellers and different price points to go off of, but there's not a whole lot for soybeans here. We're in what we call uncharted territory, and when we look at technicals, we oftentimes look at the previous interaction between buyers and sellers, and there's not a whole lot of interaction here because this is all we've got to go off, is really the last week of trade. Psychologically, I think 1050 is a big barrier. This was the previous spike high in September. If we break and close below there, there's a little bit of room down to this week's lows, and this trend line comes in about 1040. From that point, if we start breaking down below there, I think we could see a rush for the exit from the funds who are well over 200,000 contracts long at this point in time, take us down to about that 1020, 1025 area, which was this previous breakout point from October 6th. So that's what we're looking at there. As far as the fundamental side goes, I know there's a lot of people out there talking about how bullish the fundamentals are, and I get that. I mean, the prices reflect that here over the better part of the last 2 months. But I think the fact that we weren't able to rally on last Friday's USDA report was a little bit of a caution flag for the bull camp. And the fact that you couldn't get any follow through this week is a bit of a caution flag for the bull camp. November soybeans finished 15.5 cents lower this week after that big report from the USDA the previous Friday. So the inability to rally on a bullish report is what we would refer to as a fundamental rejection. So we would be a little bit cautious if you want to be long this market right here, right now. We think there will be better opportunities and pullbacks will be buying opportunities. As with corn, the path of least resistance is higher. But Warren Buffett said it best, price is what you pay, value is what you get. I don't see a whole lot of value here in the near term for soybeans. Potentially be a buyer on a dip closer to that 1020 area. Now, moving over and wrapping things up with the wheat market. Wheat, kind of the same deal with corn in the sense, or soybeans rather, in the sense that we are in uncharted territory. We saw a huge move this week, up about 31.5 cents for that December Chicago contract, taking us into uncharted territory. And, you know, where do we go from here? Well, I think we is overvalued here at $6.30. I also thought it was overvalued at $6, and probably a little bit below that, to be honest with you. Wheat is one of those markets that can really just rip your face off. I put it in the same family as natural gas in the sense that you get these wide intraday swings and it just chops people apart. So volatility from a trader's perspective, you gotta love it. It presents a lot of opportunities, but you gotta manage your risk. If you like the volatility and you want to try to take advantage of some of these intraday swings, you're going to want to probably consider lowering or reducing your position size to give you a little bit more staying power instead of chopping you into a gazillion pieces. So we do like the short side here in wheat. There's a lot of good option strategies to kind of tinker around with as well, and feel free to give us a call or shoot us an email. We can discuss that further, because if wheat does start to turn around here from overbought territory, I think wheat probably has the most potential to reverse and potentially be back below $6 in a relatively short amount of time. So that's what we're looking at here as we wrapped up this week's trade, and looking forward to next week. If you've got any questions, feel free to give us a call. Send me an email, Oliver@BlueLineFutures. Remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.